Hello everyone, we are starting with our new session of Startup 101. Today we have Ratna Mehta with us. So let me tell you a brief about Ratna. She is the global head of Vadhwani Catalyst Fund. She comes with a more than 18 years of experience in private equity, strategy consulting and banking across Everstone Capital, BCG and JP Morgan. She was an executive director at Everstone Capital, which is an Asia-focused PE fund with over $3 billion in AUM, where she spent over more than 11 years overseeing investment in consumer, education, financial services, and healthcare. So, hello Ratna, we are looking forward to hear some more about you.
Thank you so much, Rishi. Thank you for having us at IIT Kanpur. Pleasure to meet you all, guys. Thank you for the introduction. And, I just wanted to first the eyes and tell you guys that let's make this an interactive session, right? Because you are going to find this interesting and you're going to pick up important notes which will help you as you step out from the world of college to the real world if we make this interactive and talk. So as many as you can put on your videos, and whenever you have a question, probably raise up a hand and ask that question. I think that will be most interesting for all of us. So I'd love to hear from you guys as well. And as far as what Rishi said in terms of my journey has been interesting in the sense of I've started with consulting, moved on to investment banking, and then last over a decade has been in investing. And investing has been across early stage as well as, so that gives a very wide perspective, and I hope I can share it with you guys. I have with me my colleagues from Vadhwani Catalyst, Mathangi and Anubhav, and they will step in and provide certain insights based on some of the things that we've done and which might be interesting to you guys. So Rishi, I think this is an interactive session. So if you guys, I know you guys have a set of questions. Maybe Mathangi, you can, put up the questions one by one, and we can address them. And while we're discussing them, if others have any questions, please feel free to raise those questions, put them in the chat, however you feel comfortable.
Sure, Ratna, I'll just turn the questions on. Can you see my screen? Okay. Yeah, the first one.
Before I actually jump into what are some of the things which an entrepreneur needs to keep in mind when they are setting up a venture, I would love to hear from. IIT Kanpur has a very, very rich history. Some of the peers whom I have worked with, some of the entrepreneurs whom I have met, have been from IIT Kanpur, and I've seen a lot of new venture, innovative coming up from IIT Kanpur. So if I look at the representative set today, Rishi, how many do you think of your friends and colleagues, or how many people from the banks would be really aspiring to step out of college and think of doing something on their own? And that will help me give a perspective in terms of what would be important to them.
So as far as I know, in my batch, I think around 20% of people are those kind of people who are really interested into building their own startups and business.
Oh, that's fantastic. And that 20 number will evolve over time, right? So there might be people who will join into the journey, and a lot of you must be thinking of ganging up, and 2-3 of you all must be thinking of doing this together. So fantastic. So, when you're thinking of an entrepreneurial venture, it's very exciting. I want to do something on my own. I have this idea. I have 2 friends of us are coming together doing it. But what is most important is really thinking through that idea in detail, right? And kind of understanding that what is the gap in the market on that. For example, let me tell you that all of you are aware that right now in the current situation, especially in the last 6 months, and you will see that continuing over the next 1 or 2 years, where ed tech and health tech have really got wings from whatever is happening around us. Every, Bathangi and Anubhav will tell you that every third deal that we get for funding request is generally in education and healthcare, right? And what happens is that everybody wants to win. But whenever a kind of an environment is very hot, a sector is very hot, it is all the more important that you realize that where is the need gap? What is the business model that you want to build? What is the moat? Moat. You guys must have studied this in your management lessons, that anything that you want to do, a moat is very important. What is moat? Moat is a differentiation. Moat is a USP. Because if you're going to be the 10th company who's doing exactly the same thing that somebody's doing, let's talk about telemedicine, right? Suddenly telemedicine has got wings because of whatever is happening around us. Access is very important in India. Rural access beyond the metros of some specialist doctors has always been a concern, but till now, there were some of the companies who were thinking about it. Some of the companies had built business models around it, but suddenly everybody's talking about it and everybody wants to do telemedicine. But if you're going to be the 10th or the 20th company who's kind of going into this, then what sense does it make? What more do you have? What are you going to do differently? How are you going to get your customers? Because there are big boys over there now. For example, in here you have hospitals, you have players like Procter and Fine who are, have deep pockets, and they are going to beat you in terms of marketing and all of that. So I think one of the most important things which entrepreneurs, before starting your entrepreneurial journey, is to figure out what is my business model, how do I differentiate it, and what is the moat I'm going to build around it, right? And even while selecting the business model, I think it's important to first a 50,000 feet view, saying that which sector I want to be in. Is this sector relevant right now? Is this sector that is going to evolve over the next couple of years? So sector selection, business model selection is very important. Second, and the very important thing, is the team, the people whom you're going to be working with. Right? Generally, I would recommend that when you guys are starting out, you should have at least trusted partners by your side who can help you through thick and thin. And it also helps to keep the morale boosted, it's going to be a roller coaster ride. It's not always going to be high, or you'll have to emerge out of certain situations, and that is the time when you need people whom understand you, whom you can trust, and therefore the team is very important. Third thing is, of course, the funding. How are you going to fund it? Generally, initially, most of the ventures are bootstrapped. Rishi, do you guys also have incubation cell which kind of funds some of the ideas which emerge out of their students?
Yeah, we have startup and incubation center at IIT Kanpur.
Yes, I think we've interacted with them, and I know because they're doing some work related to healthcare also, and coming up with some innovation to deal with the current healthcare crisis, I recollect. So your first port of call should be that, to see whether your own alma mater is kind of funding you, and that provides a lot of credibility to you. So I think these are some of the important things that you can keep in mind when you are starting off. The fourth thing, and which will evolve a little bit later in your life cycle, is your customer, right? Understanding your customer, seeing what he needs, is really very important in terms of building your business out. Because unless you know the right way to reach the customer, your cost of marketing and all is going to be very high, and as a startup you're always going to be bootstrapped initially. So figuring out the right model to reach your customer, understanding the customer well, to know that what he or she exactly requires, are other important aspects of the first few things that you would keep in mind.
Right. So I think the next question, Ratna, that we would love to hear from you is, what are the common mistakes that you think startups, early stage startups especially, are likely to do when they're setting up their business and also in their journey to scale?
Right. Anybody of you till now, so the way we will do it is that the view is such that I can't see most of you. But if you want to answer a question and you want to say yes or no, just put on your video so that I know, I know what is the data. So any of you in your journey till now, have you guys done any startup? And when I mean startup, it could be even a chai stall somewhere, right? Have you guys tried your hand at doing any kind of business? If you have, just put your videos on. Wow, no one. Interesting. I would have expected the IITians to have done some or the other thing, like some of the stories that we hear from some of the IT giants, where they say that in college we had started the stall and this and that. That's where your journey begins. Actually, that's where you kind of learn the most.
I guess you could also drop it in the chat as well, if some of you are feeling shy.
Do we have a chat where they can put in a Q&A?
There is. I'm looking at it. Nothing yet. Maybe you can carry on, and maybe people will, start entering as we go.
Right. I think some of the common mistakes which people make is they get very excited about their product, right? About the idea. And they generally launch the idea, the product, without an understanding of what the customer wants, right? Let me give you an example over here. Correct. So, we had backed in my earlier avatar, we had backed a cosmetic company. That cosmetic company was a brand from Canada that we had brought, and we thought that we will kind of launch the brand in India. And for Indians, anything which is Gora is very, very aspirational, right? So, if you say Faces by Canada, it kind of tickles an interest in the consumer. But the mistake that the brand made was that they launched the products which were used abroad as is they launched it in India. And some of the products are very different, right? The color, the shades, especially when it comes to cosmetics, some of you might identify with it. Is the colors, the shades, sometimes the kind of moisture levels that are there, very different. And we didn't realize that till the products were launched and post-launch it's done in terms of what they like, what they don't like, and we realized that every market that you enter is very different in terms of what the customer wants, and therefore it becomes that much more important to kind of understand your consumer. So never ever launch a product without doing consumer survey, whatever product it is, whether it is a technology, whether you guys are all techies, and most of the things that you all must be thinking of maybe are AI related, machine learning, launching online aggregators for products and stuff like that. But whatever you're thinking of doing, I think it's important to first understand what the consumer wants and then go for it, right? The second common mistake that I have seen people making is in terms of costs. Most startups are bootstrapped, and it's very important to keep a control over the cost. Now, generally, when people come out of college and they're very excited about empire building, they really want to go fast, and we deal with that on a daily basis. Anubhav can tell you, we're working with a company right now which is in healthcare training, actually, ed tech plus health tech. So it's a beautiful combination. And we're having a real tough time trying to convince the promoters that their costs are like massively high. So you have to keep your costs under control because cash is king, that you would have heard time and again. Any notebook or any textbook that you read, which is basically related to entrepreneurship, they will tell you that cash is king. You have to preserve cash, you have to conserve cash, and especially during difficult times, or especially during times of crisis, I think it is very, very important to conserve cash. Third, as I said, the team is also very, very important. So you have to get the right people in. Generally, startups find it difficult to get the right kind of people, and it is important that you build the right team. If you don't have the right team, because the only wealth that you start off with is your idea and your team, and you have to get both of that right. And can you think of any other areas, the common mistakes some of the startups make. Anubhav has also got a rich experience in dealing with startups. So let's hear from him too.
Sure, yes. I think one point which recurs quite often with very early stage startup is the over obsession with the idea itself. I think a lot of times people get too enamored by the idea that even when you do your diligence of verifying whether it's a good space or a good industry, you try to avoid the negative points, even if when you're doing your own surveys or things like that to identify. I think be open to suggestions, be open to new concepts that come your way, and just keep in mind that it's possible that the idea may not be the best one. Be ready to take in suggestions, tweak your idea, and mold them. Because ultimately, if you're thinking about starting up, you will be investing like at least 3 to 5 years of your life uh, devoting to it. So you need to get the ABCs right. So be open to suggestions, and trust me, guys, execution is everything. So your idea may be awesome, but putting in that effort to actually put it and roll it out on the ground will be extremely critical. So I think that's another point. Be open for suggestions which may not work in your favor and may have to change what you had initially in mind. And start executing. Like ideating is awesome. I myself am guilty of just ideating on a lot of stuff, but putting it out there and getting the ball rolling is equally critical. So yeah.
Right. So we have a question or a comment rather from Richi Kavaste. Okay, so he says that I try to work with a few friends on a pilot project, but kind of never materialized. So Rachi, that's totally okay. I mean, that's how you get started. You start small, you pilot a few things, you pilot with a few people, and then you realize what works and that what doesn't work. To be very, very honest, I would say that it is very good if the first few things don't materialize because they're going to teach you a load of things. And then when you're out of college and when you step into the real world, and trust me, the real world is very different from a college environment where you're protected and where you have your friends in a very familiar environment. Correct? So, what, Rachit, the two learnings that you can have is one, try to figure out why the idea didn't materialize, and if the idea didn't materialize because the set of friends that you had piloted with, probably you need to think about why that happened and which are the right people to partner with. So it's going to teach you two very, very important things. Does that answer your question, Rachit? If not, you can still put up some messages in the chat and we'll try and address it. Another question.
Yeah, go ahead, Ratna.
Yeah, go ahead.
Yeah, so the other question is from Aman. So Aman has two questions. The first one is, how do I determine whether I'm capable of starting a startup? It's an interesting one. And the second one is, I have a e-commerce business. How can I drive traffic to my website? Second one is a little more specific.
Wow, so we have some people who have startups over here. I mean, I was surprised that in a batch of IIT people, we don't have anybody who started a business. So happy to see that. So Aman, first, the first one is a philosophical one, of course. How do you know that you're capable of starting a startup? And I'm going to give a little bit of a philosophical answer over here. Is that if you think you can, you can. Right? There is no hard and fast rule which says that Mr. A is capable and Mr. A is not, B is not capable. So if you, but if you think you can, you will. That is one. But it would be interesting, Aman, that if you have an idea, the best thing to do is to run it by some, right? Run it by some experienced people. Like, for example, if you had an idea and you wanted to get some thoughts on it, you could have discussed it at this forum. You can discuss it with your incubation cell. You can discuss it with some of the senior IIT, and the alumni is very strong in IITs. And a lot of your alums have businesses. Some of them are very successful. Some of them may not have succeeded. So reach out to those people and try to run your idea past them to see what do they think, and you will only learn from it. We take up the second question from Aman. Aman says, I have an e-commerce business. How can I drive traffic to my website? Now, e-commerce is a very, very wide space, Aman. So if you can specify a little bit in terms of what vertical or horizontal that you're focused on, maybe we can help you with it, right? So we'll pick up when we have some more information on that.
Right.
Okay.
So the next question here is on how do you pivot your business on your learning so far, and how do you manage your crisis, and how do you manage crisis? Especially, I think this is a very relevant question given the times that we are today.
Yeah, Matangi, you're very right. Startups are anyways always walking a very thin line, correct? They are bootstrapped, they're early stage, proof of the pudding has not been established. And then when you get hit by a comment, which is the current pandemic, then it's very, very difficult unless you have deep pocketed investors who are backing you. So most of the startups who got investors, the investors have stood by them, and investors are not making any new investments, but they're working with their portfolio companies to help them, right? So when you get hit by a crisis, love to get some of your thoughts on the chat, because I see a lot of action happening on the chat here, that when you get hit by a crisis, what would you do? But some of the things that I would do is, first and foremost, put my head down and figure out whether my business model can be strengthened, right? Because the best businesses are the ones which kind of stand the test of time, correct? Or stand the test of an adversity. So, for example, let me give you an example. I was talking to one of the co-investors. They ran a fund. They had invested in yoga studios, right? And yoga studios is something, wellness is something which is very, very popular these days. And yoga studios is kind of the next big thing that ideally would have happened if COVID would not have hit, correct? But they got hit by COVID and they had to close down all their centers. Now, what do you do, right? Not that yoga is not important, not that wellness is not important. What they did was, after initially a lot of thinking and all, they converted the entire model to online. And online fitness in the last 6 months has become something which is very, very important and relevant, because people are going through various issues in terms of not the ability not to go out, health issues, mental issues. A lot of mental issues have been cropping up in yoga, meditation, and wellness exercises to help. So they kind of turned their whole business model. They pivoted to being an online model, right? A lot of other businesses, like initially we were working, trying to help the supply chain for some of the medical supply companies, and we realized that it was not the medical companies that were getting into this. So initially the masks, the PPs and all that were being made, they were made by apparel companies. So very, very surprising. But companies who were into apparel, like for example Arvind, I'm sure you guys have heard about Arvind Mills. Arvind Mills, and you can't call that a pivot for business, but still, they pivoted and they set up an entire division to make masks. Wildcraft, I'm sure you all have heard about Wildcraft. Wildcraft is a sports goods company. Wildcraft was has taken the biggest pivot in terms of masks and in terms of other accessories which are useful for COVID or for the health emergency that we all are facing right now. So interesting examples of those pivots. So one is, I would say, conserve cash. Two is, I would say that look at your business model and relook to see if you can strengthen it to kind of good situations. And third is that think of peripheral pivots that are relevant for business.
Right. I mean, there's an interesting question from Richik here. Again, I think since you mentioned the fact that companies are pivoting online, right? So it's a very relevant question that Richik has asked here. The question is, in the recent past, we've seen a boom of digital businesses, especially in the last few months. What I want to know is, as an investor, when you see digital businesses, what factors do you assess majorly?
Very interesting question. Yeah, as you are right, I think when there is a trend, suddenly there are a lot of businesses with mushroom. Now, when we look at digital businesses, the first thing, Rachel, that I would look is that what is the problem they're trying to solve, and what is the uniqueness of the solution that they have, right? So a digital business could be in providing medicines, supply of medicines. A digital business could be in online education, online courses, various services. I'm leaving aside e-commerce. I'm leaving aside the Amazons and the Flipkart because that's been beaten down to death, right? The emerging businesses that we are seeing on the tech side are right now all, and it was very surprising. I don't know how many of you all saw the IPL yesterday, but one thing which really bothered me while seeing the IPL was that every ad that I was seeing was either a Beju or an Academy or a Vedantu or White Hat Junior. And it was like, I was appalled that, this is like such massive, aggressive marketing to students. I really don't know whether that is completely in their interest or not. So one thing I would say is there a need gap? And the solution that they have, is it able to fulfill the need gap? Is one. Second is that, is the solution differentiated in some way or the other? Because if there are no entry barriers, you may start off, you may have a little bit of an advantage because you're first mover in the market, if at all. But otherwise, if it is very easily replicable, then it becomes very difficult to sustain that business model. So that is the other thing that I see. And third, and the most important thing, is unit economics. Your unit economics have to make sense. A lot of digital businesses, a lot of tech businesses have unit economics which don't make sense. When I say unit economics, is at least the gross margin level you should be positive. You may incur initially a very high marketing cost, which will lead to a cash burn, which is fine, right? But at least at a gross margin level, you have to be positive. It should not be a business where you are subsidizing and subsidizing, and then there is no end to it, because India is a value, Indians are value customers, and if you take away the value from the product, they may not come back. It's not like the US where you get a customer used to something and then he keeps coming back for it in spite of the fact that you change the discount.
Right.
Ratna, does that answer your question? If you have any follow-up questions, and I really encourage you guys to speak up, right? So it's okay to write the questions in the chat, but it's okay to have a dialogue. And Rishi, you can speak on behalf of the team, or you can raise questions on their behalf if they are not comfortable.
Yes, surely.
Okay, so the next question, Ratna, is on, what are the, 3 attractive attributes of the business or a founder, that you, or that attracts you as an, when you're looking at early stage investments?
Right. What happens is, in an early stage investment, there's very limited diligence that you can do. Apart from which sector are you going behind, what's your business idea, the most important thing which an investor will diligence is the promoter, is you as an entrepreneur, right? And therefore, couple of attributes of an entrepreneur which are very important to the investor is, one is clarity of vision, whether the entrepreneur knows what he wants, right? That is very important. Some entrepreneurs are really confused. They will say, oh, we start off with this and we'll do this and then we'll do this, and they want to do everything under the sun. Doesn't work. You can't give everything to everybody. You have to have a niche. You have to have exactly what you want to do. So that is important. Second is some proof of execution. So generally, investors are a little shy of backing first-time ventures. They either want to see some pedigree in terms of education or in terms of experience of having done some ventures in the past, or some relevant experience. You step out of IIT, 2 years, you work with a health tech company, and then you start your own venture. That lends a lot more credibility to an investor. Third is that the investor will always try to connect and see that why you are the right person for that venture. Do you have a little bit more understanding? Do you have support from a family? who has a relevant experience or relevant platform. So just trying to connect the dots to see that why that does make sense for you. Any other points that come to your mind, Mathangi, in terms of assessing founders?
Right. I think for me, Ratna, and I think I've shared this with you also. I think the passion that a founder, displays when they interact with you, I think for me plays a very important role, right? If you believe in the idea and you are able to passionately sell the idea and put it across to the investor or anyone you're speaking to about it, I think that for me is a very, very, an important attribute. Especially given that we interact with a lot of impact first founders day in and day out. I think the whole objective of what the larger problem that they're trying to solve and how passionately they look at it, right? So I think for me that's a big plus when we interact with founders for early stage investment.
Yeah, I think the other important thing is execution. There will not be much proof of pudding of execution kind of go to an investor. But an investor will want to understand your thought process, a very detailed thought process in terms of how are you going to execute the venture. The execution, because India is a very difficult market when it comes to execution. It is very, very tough to build brands, to get things done in India. I mean, India has seen a lot of entrepreneurs, but if you talk to entrepreneurs, the common joke that we have when it comes to entrepreneurs is that entrepreneurs are made overnight in 10 years, and it's not, you can't have overnight success. You have to stay at it, you have to be persistent, you have to spend a couple of years, and that is when you kind of see the results coming in.
Right. Actually, I have a leading question from this, right? And if I may, on behalf of everybody else. Especially here, we have some budding entrepreneurs in this group. So they are first-time entrepreneurs passing out of an IIT Kanpur, right? So how do they? I mean, how does an early stage investor look at them, and what should they do to kind of ensure they get, say, the seed funding or a pre-series A, Series A funding?
So they have the pedigree, so that's in their benefit. So that's a good starting point. Second is, I think, a very sharp articulation of the elevation pitch, very sharp articulation of the business model, and clarity of vision will help them. And when they have organized their thoughts in their mind in terms of what they want to do and how they want to do, the way they put it to the investor, I think they should have a very strong execution plan to back it as well. So go with kind of all the building blocks in place, right? Go with your idea, go with an execution plan to support that idea, and have a team in place to back it up. Initially, you may be 2-3 people coming together to do it, but you have to have those 2-3 people who have a little bit of a complementary skill. One is a techie, one is a finance person, one is kind of understanding the sector. So bring in those kind of attributes to get confidence from the investor.
Right. So we have another question here, Ratna, again from our most active member here, Ritik. Right. So talking about the difficulty in operating in the Indian market, do you feel that it is comparatively difficult to monetize your services for an Indian audience as compared to Western counterparts? And there's a follow-up to that. And as per your experience, what kind of monetization strategy, example, ad revenue, paywalls, micro pricing, works best with the Indian Janta? Heavy question there.
Yeah, that's a very e-commerce question. So Rajik, in terms of monetizing, the thing in India is that it's difficult to reach your consumer, right? You have 70% of the Indian economy, which is still rural and agrarian. You have a mobile phone penetration is very high, but smartphone penetration is say 60-70%. Most of the people have not transacted on the mobile phone. They primarily use it for social media, videos, and all of that, correct? So to that extent, because a lot of your services are, the go-to market is online, it becomes a little more difficult in India. For that, you have to do targeting, right? You have to do targeting in terms of saying, are you targeting an urban customer? Are you targeting a rural customer? You have to customize your products accordingly. And you have to probably have channel partners and alliances to be able to reach the right customer, right? So, for example, if you're trying to reach farmers, probably use the ITC Chopal footprint. If you're trying to reach patients, you probably use some of the semi-urban rural focused networks, right? Hospital networks, you partner with them. So you have to determine the right partner, because reaching the customer becomes a little difficult in a digital business, right? And the second question, the follow on to that is that what are some of the monetization strategies, ad revenues, paywalls, micro pricing? So that is very, very specific to what kind of a business that you have, right? So if you have a gaming business, or if you have English speaking business, right? So English speaking, like for example, Hello English has its entire model based on ad revenues and very little coming from subscription. So initially everything is free, you come in, you get used to it, and then you upgrade yourself, and then that upgrade. So you attract the customer by a few things, you kind of support that through ad revenues or sponsorships or whatever, and then you upgrade him, because there is no, that's why I said unit economics are important. There's no chance for a business model to succeed if you're only going to rely on ad revenues. And gone are those days. Yes, some players would have done it in the past earlier, but now it's very difficult.
Right. Okay, so the next question, Ratna, is how should startups approach investors? Again, I think it's a bit of overlap from the last one, but how should startups approach investors, and what are the essential components in the pitch to investors?
I know Anubhav has seen a lot of these pitches. Anubhav, you want to take this one up?
Sure, Ratna. So I think the first step is research never hurts. So do your fair bit of research about first what stage your startup is at. So let's say you are at a pre-series or an angel stage, then you need to identify investors who are willing to give in ticket sizes which work for that stage. So if you need, let's say, a $500,000 check, and you go to a private equity investor who normally does 5 million and up, it's a waste for you and the investor itself. So first step is identify where your startup is right now. And I believe now the time is amazing to be a early stage entrepreneur, because the amount of networks, accelerators, incubators that are out there are immense. And trust me, most of the folks over there are open to guide you, give you suggestions on it. So the first step I would do is find out a list of accelerators and incubators who work in the space where you want to work in. Reach out to the peers over there, the counselors over there. They would be more than happy to help you out. And then create a brief elevator pitch, create some material around it, and then start reaching out. I think for the last 1 year at least, I believe the ecosystem has grown tremendously well. And in terms of the ecosystem support that you can get, there should not be any issue. So if you all need any specific help on that front, we'd be more than happy to connect you with some of the incubators and accelerators out there. But yeah, so first find out who your target audience is, and then work backwards. Like talk to some of the incubators, find out what kind of elevator pitch fits to them, create a very brief, crisp elevator pitch and a 10-slider deck, and then you can start reaching out to the larger audience out there. I think that kind of a structured approach would work really wonders for you. Ratna, would you like to add something to that?
No, I think you pretty much kind of touched upon this. And for me, I think the most important thing is prepare. If you are going to an investor, they see at least 10 pitches a week. The elevator pitch is very, very important, because it doesn't take them more than 5 minutes, initial 5 minutes, to figure out whether they're going to be interested in this or not. So you have to kind of make your elevator pitch in the first 5 minutes and hold their attention. Once you hold their attention, you will see it. You will see, based on the questions and all that keep coming, that whether they're interested or not. So I think preparation is very important. I already spoke to you about a couple of points in terms of, clarity of thought, vision, execution, team. Pick these blocks and explain it to them, and I'm sure that will help.
Great. So the last question in from the slide is the company investor fit, right? So for, what kind of investors should startups aim to attract, and how do they go about it?
What kind of investors should startup aim to attract? Okay.
Yeah.
I'm sure most of you guys understand the pre-seed stage, the seed stage, the the execution phase, then the growth phase, the Series A, the Series B. Initially, I would suggest that do not get in institutional investors. Get in friends, families, HNIs who can add some value, who have some relevant experience in the field, and who can help you. So at a pre-seed stage, that is the thing. You will see some traction around the seed stage in terms of how your business is evolving and all. And based on that, then you can start going to relevant investors. So there are funds who focus on certain sectors. So if you're in a particular sector, it's good to approach those investors. If your business has a social impact kind of getting very wide wings right now in terms of more and more people wanting to do social investing. So if you have a social angle, approach social investors, and you will get the right partner. So initially, do not go for large investors. Once you have some proof of execution and all, then you kind of start approaching the more institutional and the formal investors.
Right. Any more questions from you guys? Would be happy to take.
Rishi, anything from your end? But otherwise, I think it was pleasure covering most of the things that we've experienced during our journey, and answering some of the very intelligent questions which the team has put up. So very happy to have been part of this discussion, and I hope it was useful to you guys.
Yeah, definitely. I guess it will be more than useful for those who are really at a very early stage of their startup and thinking of at least they have an idea on how they will plan or get an investor and all.
I'll tell you something, Rishi. It's not only about somebody who's starting their venture. I know a lot of you guys will join startups at various stages, because those are very attractive areas to start off your career with. And, with the kind of funding which most of the startups are getting these days, they will want talent like you. And it is that point in time that it's very important to understand the ecosystem within the organization. At what stage you are, what is the business model, what is the strategy, whom are you approaching, and that will really help. So it's not only those guys who are looking to do their own startups, but it's even those guys who are going to go and join early stage companies.
Definitely.
Right.
All right.
So I will encourage everyone, if anyone have a question, please put it in the chat.
Or you can always reach out to us. I'm sure Rishi and Priyam have our email ID. So always you can write to us and reach out to us also if you're a little shy to speak on the public forum.
All right, then should we call it a day? Thank you so much, guys.
Thank you. Thanks Rishi and Priyam for setting this up. It was a pleasure interacting with all of you.
Thanks, guys.